Hello traders, this is Blake Morrow and you are listening to the week ahead video for May 31st, 2020. I hope everybody's having a safe and quiet weekend. You know, it's not so quiet around the United States. There's obviously some social unrest right now, so I hope you guys are really, for those of you that are in the United States, staying safe. Now, that's actually one of the reasons why I wanted to make this video for today, and I'm filming it a day earlier than I normally do, because I wanted to get it out of the way and get it out to you guys as soon as possible. I think there's some developments that are happening in the markets that might conflict a little bit with what's happening in the real world, so I wanted to get this out of the way quickly. Now, before I continue, I just wanted to say, if you haven't tried out ForexAnalytix, make sure you do so. Here's my pitch, because if you use ForexAnalytix, it's only $1 for 10 days to try it out. And then when you try it out, make sure you don't download the mobile app. Doesn't matter if you're at the Google Play Store, the App Store, the iTunes Store. Just download the mobile app, because you're going to be able to use it not only with the premium version, but also with the light version. So if you decide to go with the light version of ForexAnalytix, you'll still get to try the premium version. So it's just $1 for 10 days. And make sure you get into our chat room while you're testing us out. Let me move the data flash out of the way. That's part of the ForexAnalytix platform. And there we go. Let's go ahead and get started. All right, so obviously, you know, here in the US there is some social unrest, and I'm not sure what's going to happen on Saturday night, which is the time of filming. There's a lot of curfews that are being implemented, and it might get a little intense tonight or over the weekend, and I'm not sure how the equity markets are going to respond and how the currency markets are going to respond to it. I doubt it's going to have much of an effect on the market from a risk appetite, risk aversion standpoint. However, if we do see a little bit of a sell-off in equities, the one thing that is in play right now is we're well above the 200-day moving average, and it looks like we're going higher. So if you can look at the S&P chart right here, and I know it's a little busy, so I'll take you over to my charts here in a moment, because these were not done by me. I don't typically do the analysis over the weekend. Sometimes I do for basic technical analysis, but I do it throughout the course of the week. So if you're using ForexAnalytix throughout the course of the week, and you see like some of these intraday charts, like this one here in the US dollar Mexican peso, these are my charts that I've posted, and this one was on Friday, but Friday or Thursday of last week. But anyway, all the other daily analysis, basic technical analysis is done by other team members over the weekend. So going back to the S&P though, the thing is we are well above the 200-day moving average. So at this stage in the game, the 200-day moving average comes in right around 3,000. And so let me take you over to the S&P, since I have it right here. That was a 5-minute chart. But you can see we're above the 200-day moving average. So I would assume while we're above the 200-day moving average, okay, I wouldn't get too worried about the uptrend in equities. And matter of fact, if you look on Friday, this minor uptrend line held. Okay, there were some announcements about repercussions around Hong Kong and China, and the markets didn't find it to be a big deal, and that's why we routed at the end of the day. We got a little bit of a short squeeze. So, an easy way to think of the equity markets while we're above the 200-day moving average, or more importantly, let me take this line right here and let me make sure I've got the right line. See, I grabbed the fib. Let me grab the line itself. This one right here. Okay. While we're above this breakout point, I wouldn't be worried about risk appetite. However, that's something that we have to watch going into next week, because, and I'm talking specifically about the S&P here, because if the S&P breaks back below the 29, let's call it 29.75 level, then that's going to leave us with a false breakout on the weekly chart, and we'll be back below the 200-day moving average. So this resistance here, dang it, I didn't mean to do that again. I keep grabbing the wrong thing. Hey, that's what she said. I'm joking. Come on, guys. It's Saturday for me. Give me a break. And I'm trying to film a markets video, so I got to make it I got to make it a little funny for you guys, right? Especially in light of everything that's happening in the world right now. Everybody could use a little bit of a laugh. Okay, so again, while we're above this resistance here at 29.75, I wouldn't be worried about risk aversion. Okay, dips have been bought. Dips were bought all week last week. You know, if you think about like the riots that are happening right now in the U.S., is that going to affect the U.S. economy any worse than what's happened with the coronavirus? No. Everybody in the equity markets is chasing each other's tail right now. You have, if you wonder where this insatiable appetite to equities comes from, it's just everybody's underweight. And so, you know, if you're an institution and let's say you got a $500 million of investors' money, and you're underperforming the equity markets, the S&P as an index, you're going to face redemptions if you're not invested. So you got to be buying something, right? If the market screams up another 10% from current levels, let's just say, I'm just using that as a number, and let's say your fund that you have, your institutional fund that you have, only is doing 4%. Well, you're going to be facing some redemption. So everybody's chasing yield at this point, and they're underinvested. A lot of people got shook out because of the coronavirus. So that's this, you know, V-shaped move that we're seeing here. And I expect that to continue while we're above 29.75. We drop below 29.75, things are going to change a little bit in equities, or not just equities, but also in currencies. So let's talk a little bit about currencies, and let's talk about the euro dollar. So the euro dollar is breaking out, and it has been a massive breakout above the 200-day moving average. And you can see that once we got above the 200-day moving average, it's just, you know, it started popping higher. And as far as I'm concerned, as long as we're above this 200-day moving average, and specifically, you know, above this previous channel resistance right here, okay, and that's going to come in roughly right at 110. Okay, and there's actually, see this trend line right here? This is probably more important because you could see dips. I mean, this is a big breakout. I mean, in currencies, this is a big move. So, you know, if we dip back down towards, let me move that fib back, put right here, right there. It's not what I wanted to grab. I wanted to grab this. Okay. So any dip towards 110, maybe 109.70, I expect that to be bought. All right. We drop back below this trend line here, and then that's probably going to coincide. Okay, it would coincide with equities breaking down. So if you go back to what I was just saying about the S&P, let's go back to the S&P and say, all right, we're above 29.75, and as long as we're above 29.75, the market's bullish. Well, while the euro's above, let's say roughly 110, 109.70, you got to stay bullish. Now, I'm gonna make you guys imagine a few things. You know, if this, then that. So going back to the S&P, if this happens, right? We start breaking through this support. If this happens, then that happens, right? So the dollar, remember, is a product of risk aversion and risk appetite. So as long as stocks continue to go higher, the dollar should stay weak. However, if for some reason, you know, the markets start to get fearful of social unrest, you know, because right now, well, let me stop for a moment, because right now the market is climbing the wall of worry, right? Oh, we got COVID-19, we got social unrest, we've got a fiscal cliff that we're about ready to go off of because all this, you know, the liquidity that the government has provided for the last couple months might run out, blah, 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 blah. That's still keeping the market afloat because the market's climbing the wall of worry, and it's been going, higher, right? But if all that stuff comes to a head and then the markets finally say, you know what, enough's enough, and we start moving lower, then that's when the dollar will reverse course, and we see the dollar index, that has been under pressure reverse. Now let's not ignore this either, and this is the dollar index now. We're not looking at the euro anymore. We're not looking at the S&P. We're looking at the dollar index. The dollar index tried to break down through the support. This is the spike low from March, but we closed above it. Now, I'm not good enough to look into my crystal ball and figure out what's going to happen Sunday afternoon, or really more or less Monday, Monday by the end of the day, and see where we're at. I'm not sure how the market's going to digest everything that's been happening over this weekend, but I think we are at a pretty important area for the dollar and the S&P. And I think that as long as the S&P stays strong, the S&P stays strong, then the dollar should stay weak. But if this should reverse course, then if you're long the euro, you have to be careful. Now, I'm going to stop here for a moment because I could talk about all these other major currencies, and I'll reference one really quick. I'll reference the Aussie. Now, the Aussie dollar, as you know, is at pretty major support here, or major resistance. We're just at the 200-day moving average. This is the previous support from October of last year. You can see all of the support that held. That's the big breakdown point. We broke down in February, retested it in March, flushed lower. We've reversed right back up to the 200-day moving average to the breakdown point. This is obviously very important resistance. Now, I'm bullish the euro right now. But the question is, am I bullish the Aussie? I'm not. See, I'm not. I'm in the belief that the world basically being on hold for roughly 2 months plus globally, certain parts more so than others, is going to impact growth in a negative fashion in the months ahead. All right. Will we have a bounce back in growth? Sure. Will we have maybe some pent-up demand? Sure. But do I think longer term it's going to have it's going to dent global growth? Yes, I do. Especially when you take the two largest economies in the world, being U.S. and China, being closed down for such a long period of time. I think that that's going to be reflective in the economy overall. So, with that being said, am I bullish the euro right now? I am. I think there's a lot of good things that are happening in Europe, and I think the market is underweight Europe as a whole. Am I as bullish the Australian dollar? No. And so, if you want to avoid the dollar aspect of it, and you're like, well, I really don't know what to do with the dollar. Well, then that's when I'm going to turn your attention over to like the Euro Aussie. See, I think this currency pair, this is what I want to leave you with today. I think this currency pair is at risk of revisiting, not necessarily those highs, but I think it's at risk of, revisiting maybe, the mid 170s again. Now, why do I say that? Well, if the euro is going higher, I think the Aussie is going to go higher, and I think the euro is going to outpace the Aussie. And what we had last week, and this is a daily chart, right? We had a false breakdown below the 200-day moving average, a false breakdown below support, and now we're developing this little inverted head and shoulder pattern. So what I'm really looking for at this stage, and this is if you're part of the ForexAnalytix family, you're in the chat rooms, you've heard me talking about this. I'm actually watching this as an inverted head and shoulder pattern. So I think early this next week we might be able to come back down here. But what I'm really looking for is I'm looking for a move above 168, this trend line right here. And if that happens, I want to be very bullish the Euro Aussie, or I want to be long the Euro Aussie. So that is a pair that typically moves up during periods of risk aversion. That means if stocks are coming down, the Euro Aussie tends to move higher. Considering the fact that I'm bullish the Euro, no matter what, this is the pair that I'm going to be keeping on my radar going into this next week. All right, and you know, if stocks do come down, that's just going to help this even further. If stocks continue to grind higher, I think the Euro Aussie will at least be sideways. So I'll be willing to buy dips, sell rallies. You know, buy it at 166, you know, 165, sell it at 167. Be able to, you know, trade it that fashion, buying it on dips. But if stocks start to come down, that should create a bullish breakout or an upside breakout in the Euro Aussie. Should create that upside breakout like that if stocks do actually do start to come down. So anyway, I hope that all made sense to you guys. Now remember, if you want to get my analysis on a day-to-day basis every morning, it's free. We do the F.A.C.E webinar, and you know, you can log in to our F.A.C.E webinar every single day. If you want the link, it's going to be in the description of this video. This way you'll get all the great interviews that Dale Pinkert does throughout the course of you know, the week. He does so many great interviews, and he's done so many great interviews over the years. You know, so many great traders, and you can go through all of them. We've got 34 pages of interviews. It's crazy. Anyway, yeah, it's available to you every week. So make sure you, or every day, excuse me, throughout the trading week. So make sure you follow us via Twitter. You subscribe to that webinar so you can listen in, because my opinions will change throughout the course of the week. So if you want, you know, my views on a daily basis, that's where you're going to find them. Not just myself, but the rest of our wonderful team as well. So I hope you guys found this video useful, and if you think it's going to be useful for you in the next week, make sure you give us the thumbs up on YouTube, because and subscribe to our channel as well, because this way you won't miss any interviews, but it makes us feel better for producing these videos throughout or every weekend for you for free. I know the team that does all the editing and posting of all these, they love to see, you know, the big thumbs up from you guys. So I hope you stay safe, stay healthy. You know, hope you stay out of any you know, precarious situation, and I will see you Monday morning on the F.A.C.E webinar. Thanks again for listening in. My name is Blake Morrow with ForexAnalytix. Have a great remainder of your weekend.